When interest rates go higher, then it becomes impossible for the consumer to be able to afford
Correct.
to borrow money at the higher interest rates. So that kills the demand, and people just have to stop buying.
Hello, Robert Kiyosaki at the Rich Dad Radio Show, the good news and bad news about money. And today we have a very rare friend, and I'll say his old friend. I mean, this guy is such an old friend that I bought his book in Borders bookstore. And that was in the dark ages. I'll tell the story about how I found his book. I was in Borders, and today I think it's called Cheesecake Factory at the Biltmore. They repurposed that place. But I was walking past, and this book went, pick me up. And I think it was A Dollar Crisis by Richard Duncan. So I bought the book, and I went, oh my God, this guy is, he's intelligent. And my definition of intelligent is somebody's intelligent if they agree with you. And as you know, I've never trusted. I've stopped trusting the U.S. dollar around 1971, and I just don't trust the U.S. government anymore. So, Kim, welcome, my friend. His name is Richard Duncan, and the thing about Richard is he lives in Thailand, and so he has a perspective on the world. He's an American. Went to that prestigious school, Vanderbilt, and has testified via Congress just recently. But he's an economist by trade. But man, he has a macro view on the world. Any comments about Richard, Kim?
Yeah, I'm excited to have Richard here today. And what I love about Richard is he does have a global view. And there's so much change happening in the U.S. And we were talking with George Gammon, and George talked about, if you live here, you see the same thing day after day after day. So you don't see the change that's coming oftentimes. But from an outside perspective, from a global perspective, as Richard has, I think he can shed some light on what he's seeing from the outside as well. So welcome, Richard. Nice to have you here.
Thank you. Thanks, Kim. Robert, it's so great to see you.
Great seeing you.
Thank you.
That's pretty old, huh? Borders bookstore.
That's funny.
Give the world a little bit of your background, but also why you live in Thailand. And also, I'll plug your product called Macro Watch. Richard has the big picture view of what's going on in the world economy, which is crucial because most people can't see what's past lunch. So, Richard, welcome to the show, and please give the audience a little bit of your background and all that stuff.
Okay, thanks, Robert. So I grew up in America, in Kentucky, and started my career in Hong Kong in 1986. I'd seen Asia as a backpacker a few years before that and realized it was booming. So moved to Hong Kong in 86, got a job as a securities analyst with a stockbroking company. And most of my career has been in finance, first doing research on equities, and then I became an economist and a strategist. I worked for Salomon Brothers for a couple of years in Bangkok as their head of research. Later on, I worked for the World Bank in Washington for a couple of years. And then I became global head of investment strategy for ABN AMRO Asset Management based in London, looking at all asset classes globally. And I've written 4 books along the way. The first one was The Dollar Crisis, and the most recent one was called The Money Revolution. And now my business is I produce a video newsletter called Macro Watch that I publish every couple of weeks. It's a video, me discussing something important happening in the global economy and how that's likely to impact everyone's wealth.
And a lot of things you were talking about, a book called The Death of Capitalism, or all your things you've been writing about, and I've been writing about the same things and now coming true. And it's a pretty spooky time globally. I mean, this is a big macro global problem we're sitting on. Is that correct from your viewpoint from Thailand?
Yes. So the big round recently was because of the COVID pandemic. All the governments incurred enormous trillions of dollars worth of debt, and their central banks helped finance that government borrowing by creating trillions of dollars. And that pulled us out of the COVID depression and set off a boom with all of the new money they created. especially in terms of asset prices. But now, and it also caused high rates of inflation. Now, to fight the inflation, the central banks have increased interest rates very significantly. And even more importantly, I think, now they are instead of creating money, as they were doing through quantitative easing, now they're doing the opposite. Now the Fed is destroying $95 billion every month through quantitative tightening. And that's sucking the liquidity out of the financial markets. It's like just, imagine a ballroom full of investors, and suddenly the Fed starts taking the air out of the ballroom. At first, they don't notice, but then it becomes hard to breathe, and they all run to the exits. So we're right now where liquidity is getting tight, and it's probably going to be very hard on the financial assets in the months and quarters ahead.
How are they tightening? What are they doing? What specifically are they doing to tighten?
Well, so in terms of interest rates, they've increased the federal funds rate from 0 to now 5.25%, 5.5%. So that's really very radical interest rate hiking in such a short period of time, just about 15 or 16 months. But in terms of quantitative tightening, they're literally taking $95 billion a month out of the financial system and destroying it. $95 billion adds up over a year. That's $1.1 trillion, or about 13% of all the dollars. So this is, rather than pumping money into the system, making everything appreciate, now they're sucking the money out of the system. And we're getting to the tipping point where I'm afraid that asset prices, especially the stock market, which is very expensive, but other asset prices as well are likely to suffer and perhaps take quite a big tumble, because they're really very expensive compared to their normal levels. So they're very vulnerable to a correction.
Right. What that means for those who, on the macro side, is when the Fed creates money, it puts money kind of into the system via our big banks like JP Morgan, Wells Fargo, and all that. And then you and I walk up, and businesses walk up to JP Morgan, Wells Fargo, and your local bank, your regional bank down the street, and then you borrow money. So money comes into existence via debt. When the Fed takes money out of the system, that means there's no debt being created. That means no money is entering the system. And where it shows up right now is credit card debt is at an all-time high because mom and pop don't have any money. And plus inflation, due to this Green New Deal stuff that Biden's doing, cutting off the oil systems in America, it's crushing America right now. So credit is going out, and the economy is crashing as we speak. And I think Powell and his friends are laughing all the way to the bank because they're not putting money back into the system. Is that fairly accurate on the macro side there, Richard?
Well, so yes, they've increased the interest rates to make it more difficult for people to borrow. They want people to borrow less and spend less, so there'll be less demand, and that will cause inflation to fall. And they also want to take away some of this new money that they created during the pandemic, also to make liquidity conditions tighter and to bring down the inflation.
So I have a question. If they're raising interest rates, which makes everything more expensive, which makes it more expensive to borrow, aren't businesses passing that along to their customers so the prices would go higher? I mean, I don't understand how that is a hedge to inflation, because I would think everybody's going to raise their prices because everything just got more expensive. It's happening in real estate. It's happening in rents. Isn't it happening across the board?
Well, when it becomes more expensive, when interest rates go higher, then it becomes impossible for the consumer to be able to afford to borrow money at the higher interest rates. So that kills the demand, and people just have to stop buying. So the companies can't push up their prices, because if they do, they won't be able to sell their products. So the demand drops, and then the companies either sell less or they begin to reduce their prices. And that's how the inflation comes back down again.
So there's two things happening, is that interest rates are going higher and they're pulling liquidity out of the system. So people can't spend money. And so that's causing this huge crisis because we said pretty much there's two things, right? Like interest rates are higher, they can't borrow, so that's less money coming into the system. Plus they're QTing it, quantitative tightening it. They're withdrawing money out of the system. And then suddenly you see businesses start to fail because mom and pop don't have any money because they're maxed out on their credit card. I mean, that's the macro system there.
That's right. But what we've seen up until really right now is the economy has been surprisingly strong. And the reason why it's been surprisingly strong is because the government handed out so much stimulus during the pandemic, roughly $5 trillion. And the Fed financed that by creating $5 trillion new dollars and essentially financed the whole thing. And by sending out stimulus checks to the Americans, suddenly they had a lot more cash. And this is not small change we're talking about. This was an enormous transfer of wealth, essentially from the government, or you could say future generations, to the present generation, giving them this was spending almost like on a wartime basis. When the government has a war, it spends enormous amounts of money, and that makes the economy boom because of all the government spending. Well, this is almost spending on a warlike basis, and it's carried the economy through right up until the most recent quarter. The most recent GDP was up 2.4%, much higher than everyone had been expecting. But I think we're getting to the tipping point now within the next couple of quarters where this is going to go into reverse because of the higher interest rates and because the Fed is destroying almost $100 billion every month and taking that out of the financial markets.
So, Richard, what's to stop the government or the Fed from implementing UBI, Universal Basic Income, where everybody gets a check, or they keep these stimulus checks coming to people, to individuals? What's to stop them from doing that?
Well, right now, the government is divided. The House is split between the Republicans and the Democrats, I should say the House of Representatives is controlled by the Republicans now. The Senate is controlled by the Democrats. So what's stopping them is they can't agree on anything, so they can't pass any new laws. So that nothing is going to get passed at least until the next congressional elections at the end of next year. So that's the main thing that's stopping the government from doing anything until 2025.
Right. And then Biden is now proposing, that thing about the student loan debt. I don't know if you've seen it, Richard, but student loan debt is $1.7 trillion, is the number one asset America has today. So America the American economy is being supported by kids going to school, they take out student loans. Those loans I wouldn't touch. Kim and I have a lot of debt, but I would never touch a student loan. And we're getting so desperate, we're screwing our students now. So again, this is Richard Duncan. He's been a longtime friend. His business is called Macro Watch. He has a fantastic newsletter with a lot of pictures in it. It's essential for people to get the big picture before you look at the small picture. And the small picture is mom and pop. Their credit cards are maxed out. Student loan debt is killing our students. And as Kim and I always complain about, we have no financial education in our schools. And we wonder why we have problems today. So we come back, Richard's given us the good news. Now we get to the bad news. Not really. There's always a silver lining. So the reason I like to have Richard on is because I get to see what I can do next. Because what happens when those stimulus checks came out, they had those goofy guys that they were buying AMC and some other really stupid stocks. They were just jacking these stock prices through the roof because all the young people thought they were Warren Buffett or something.
Yeah.
And what Kim and I bought with our stimmy checks, we bought gold and silver.
We didn't get stimmy checks, Robert. They didn't give us anything.
We got those big bonus checks or something. But anyway, when we come back, there's always good news. So again, our guest is Richard Duncan, and we'll be back in a few minutes with the good news. We'll be right back.
Today's show is sponsored by Gold Alliance. If you're concerned about high inflation, looming recession, a troubled banking system, or out-of-control spending in Washington, this is an important message to hear. Because the fact is, during every major crisis in U.S. history, many of those who failed to prepare watched their savings, investments, or retirement funds go down, while many with the foresight to own gold helped preserve their purchasing power. Gold even made some folks richer. Now we're facing several major crises at once, and experts say we may soon face even more economic trouble. So please don't wait. Learn the simple way you can diversify with gold and put yourself on the road to financial peace of mind, even in uncertain times. The new free 2023 Gold Guide from our friends at Gold Alliance can show you how. Just visit www.freegoldguide.com/Robert or call 1-800-473-4585. Republican Governor and conservative commentator Mike Huckabee says Gold Alliance is the only gold provider he recommends to his friends and family. Find out why and visit freegoldguide.com/Robert or call now at 1-800-473-4585.
Feeling powerless over current events and your financial future? Financial freedom is your freedom. Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad. Over 40 million people have taken Robert's advice. Now it's your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And once again, we have a longtime friend, Richard Duncan, as our guest today. And we joke about it because, as I said earlier, he's such an old friend. I bought his book at Borders Bookstore, and Borders is no longer along. And Kim and I are friends with Sandra Borders. Remember that, Kim? We were talking to Sandra about her bookstore.
Yeah.
So anyway, there's always, when there's bad news, there's always good news. Always remember that, because when those frickin' idiots were buying GameStop and AMC, and they thought they were Warren Buffett or something, or Donald Trump, I don't know who the heck they think they were. They're idiots. So the good news is there's a big crash coming. That's the good news. The question is it going to be bad news for you or good news for you? So Richard Duncan has been a friend of us for hours, for years, and he is one of the most fantastic tools, intellectual tools, is called Macro Watch. And if you want to see what's going on in the world, Richard Duncan sits on the border of our buddies there, Thailand and China and India. I think India is going to pass China. I'll be in India in a few weeks there, Richard. But anyway, I think India is going to pass China pretty soon in GDP, in production at least, because China's in trouble after their Evergrande real estate project collapsed on them. But there's always good news. So I would suggest one part of good news right now is subscribe to Richard Duncan's Macro Watch. So, Richard, would you tell us a little bit about Macro Watch, please?
Thanks, Robert. Yeah, Macro Watch is my video newsletter. Every couple of weeks, I publish a new video. It's me doing a PowerPoint presentation discussing something important happening in the global economy, the U.S. economy, what the Fed is doing, what the government is doing, what the private sector is doing, and how that's likely to impact stocks, bonds, commodities, currency, generally your wealth. So I'd like to offer your listeners a 50% subscription discount if they'd like to subscribe to Macro Watch. Just visit my website at richardduncaneconomics.com. That's richardduncaneconomics.com. Hit the subscribe now button, and when prompted, put in the discount coupon code CRASH, and you can subscribe for a 50% discount. That's CRASH. You'll find it's very affordable. I hope you'll check that out at richardduncaneconomics.com.
Well, it's priceless. I mean, anybody that doesn't subscribe probably was a GameStop buyer. One of those idiots out there. I can't believe it.
Well,
I just can't believe it. I just can't believe how stupid they were. I mean, it's incredible. Anyway, how often does your newsletter come out?
Let me just say, I keep getting asked all the time, where do I find good resources? Where do I go to get good information? And Macro Watch is a place to go to get real good information. So, because there's so much information out there.
Or
So,
go join those frickin' idiots who bought GameStop. I mean, God almighty. Or how about those guys who were flipping houses during the real estate boom just before 2008? And I don't think people realize that bad news is good news. So like Kim just bought some acreage for timber. But not so much not that we bought timber, but where is the timber? And the timber she's buying or we're buying is between Savannah, Georgia, and Charleston, right, South Carolina.
okay.
That's one of the most that's the growing corridor of the United States. So there's always good news, but if you're one of these GameStops, or if your dreams have become a TikTok dancer or something, then you don't need MacroWatch. But MacroWatch at 50% discount is a bargain. Once again, how often does it come out, Richard?
Every 2 weeks, I upload a new video. The video is about 20 minutes long. It has 50 charts that you can download normally. So it's very easy to understand and explains what's happening in the world. The goal is to teach the subscribers how to understand how the economy really works in the 21st century, in this new age of paper money, because it doesn't work the way it used to.
Yeah, and Richard's my go-to guy, especially because he sits in one of the power centers on planet Earth. It's Thailand. And he was just in Vietnam and all this, but he sits on the border of China and India. And because I'll be in India soon. But most Americans got their heads so far up their butts, they can't see anything outside of America. So, Richard, I have a quick question. What are your thoughts on China and Taiwan?
I don't think there will be a war anytime soon because it would be so catastrophic for China's economy. If they attack Taiwan, then the United States will stop buying goods from China. And right now, the United States buys $400 billion worth of goods from China every year. That's over and above the amount of goods that China buys from the US. So they would immediately lose profits of $400 billion a year, and that would destroy their economy and probably their political system. So for that reason, I don't think they will anytime within the foreseeable future.
And then, the whole area you're in, that area, Southeast Asia, that's one of the richest parts of the world. I mean, you have pretty stable economies and you have hardworking people.
As you said, I was in Vietnam last month and it was incredible. They've had such an economic boom there for since we have our trade agreement with Vietnam, which started around 2000, they have been completely transformed. Their trade surplus with the US last year was $120 billion. And now Ho Chi Minh City used to be very quaint and all low-rise. Now you go there, look across the river. It used to be grasslands. It looks like Manhattan on the other side of the river. And this is the result of its trade surplus with the U.S. and being able to boom, just like all the other Asian tigers and dragons have boomed through export-led growth. Vietnam's really been enjoying that recently. And that's why Asia has become so prosperous in such a short period of time. Since I've been here most of the time since the mid-1980s. This has been the right place to be. It's been extraordinary to watch.
And Richard, you called it because in one of your books, you talked about how wages were going up so fast in China that China would have to go outside of China to Thailand, Vietnam, and those areas to find the labor. And so you are calling, this is 20 years ago, that part of the world would be the next boom economy, and you were right on, which is why I said we have a lot of young men watching this program. If I was a young man right now, I'd be traveling the world. And the world is an exciting place. I mean, what a time to be alive today. There's going to be so much turmoil. And look at all the wonderful places in the world you can go visit while you're still young. I mean, we traveled to Vietnam, that's all that area. Wasn't it fantastic, Kim?
Yeah, that was. Hey, and I wanted, just to the point Richard was making, I just have a question. So Vietnam's booming, much of Asia's booming, trading with the U.S. So U.S. production is now slowing, economy slowing. How does that impact the entire world? How does that impact Vietnam?
During COVID, the Americans got their stimulus checks, right? And they were also locked in at home. So they couldn't go out and go to the movies and drink at bars. So they bought a lot of iPads and things online. And most of these things running machines, most of these things were made in Asia. So Asia's exports, including Vietnam's, really had a fantastic couple of years as a result of that. But now the Americans are going out spending on goods rather than spending on on services, I meant to say, rather than buying more running machines and more iPads. So suddenly Vietnam's exports are dropping quite sharply. And all of Asia's exports are dropping quite sharply. We got China's economic data today. Their exports are down 14% from last year, which is one of the biggest drops they've experienced, other than outside of the first shock of COVID. So right now, Asia is being hit because their exports are all dropping after the big COVID boom that they enjoyed for the 2 years before this.
Do you pay much attention to the European markets there, Richard?
I look at what the central bank, the ECB, is doing in particular quite closely, and I monitor what's going on with their GDP and have a pretty good idea of what's going on in Europe.
What do you see happening there?
Well, so of course the war is dominating all of their thoughts. And when when Russia attacked Ukraine, that drove up energy prices, gas prices in particular, and also food prices. But gas prices, liquefied natural gas prices, or the kind of gas you use in your cooking stove or to heat your home, that shot up just to wildly high levels. But it turned out that the winter was much milder than people had expected. And the Europeans were quite fast to source gas from the United States and from other places. So it ended up that they didn't run out of gas. They didn't run out of energy. The winter was mild, and they avoided going into a serious recession. In fact, they really didn't dip into recession at all. But they did have inflation. Now the inflation's coming down, and things are not great, but they turned out to be a lot better than everyone feared a year ago.
And then I've been following pretty closely the BRICS, because the BRICS are going to the Belt and Road Project out of China and all that. The BRICS nations, there's now, started with 5, there's now 41 inside of it, which is about 3/4 of the world's population. Have you been tracking BRICS at all, or what that impact to the world's going to be?
So the BRICS used to all move together to a large extent, but now they're all moving in different directions. Russia is going to have an economic crisis for a long time because of its war and the sanctions that have been imposed on it. China is turning Japanese. China has had such a long economic boom, but now they have nowhere else to boom to. They have too much housing. They have too much infrastructure. They have too many steel factories. The world just can't keep buying more and more things from China. So they've run out of room to grow, and their population started to shrink. So Japan's economy hasn't grown since 1990. So China is probably going to move in that sort of situation where China just stops growing and flattens out and never overtakes the US as the largest economy in the world. I agree with you about India. I think you're very smart to go to India. India has a very good future. They have such a large population, the largest in the world now, lots of well-educated and low-cost labor. And all the companies know they need to get out of China and move and relocate somewhere friendlier to the United States. So that's very likely to benefit India's economy for decades to come. And the other BRICS, they have their own issues, but I think India is going to be one of the best performers for a long time to come.
I agree with you, because this guy Modi, who's a prime minister or the president or whatever he is, he's a smart capitalist. And India doesn't have the same warlike tendencies that China did or does. And I was just kind of laughing because this one guy was commenting on the Ukraine-Russia war. He says, the Russians are so desperate, they're dusting off all World War II tanks. Do you know what I mean? It's just eating them alive. And any comments on the war or anything, how it affects macro? Ukraine, Russia, and supply chains.
Well, it did hurt the global economy and the U.S. economy quite seriously when it began, because as it became clear that they were going to invade in February last year, we got a big spike in oil prices. Oil prices went up to more than $120 a barrel, and all the food prices shot up, the metal prices shot up, and that was another big blow to inflation. That caused another big spike in U.S. and global inflation, forcing the Fed to hike interest rates even more. And so it's done a lot of damage to the world economy already, and it's still damaging the world in terms of high food prices. But unless it gets worse, of course, it could always get worse, but hopefully the worst is past, and as far as the damage that war is going to do to the global economy.
When a crash comes, that is an opportunity to really invest and make a lot of money. And so, our friends, they're all basically waiting. They're sitting on cash. They're ready to pounce when things go wrong. But if you're not prepared and you don't know what to do, you're going to be on the other side of the equation.
Very good. I have one quick question. We're out of time. 1 minute. What do you think about AI? Because everybody's pumping that one.
It does look like it is going to create a new industrial revolution that's going to transform the world over the next 5 to 10 years. We're probably going to get extraordinary miracles out of it. The ability for the machines to teach themselves should enable them to teach themselves to cure all the diseases for us, for instance, in short order. What they've already accomplished is truly extraordinary. They will probably accelerate the development of cheap fusion, for instance, bringing it forward by decades from what was previously expected. That would be cheap, clean, limitless, non-polluting energy forever. So, it's probably going to produce really, really great things in terms of increasing productivity and human well-being. Let's hoping for the best.
Can we just keep it in the hands of good people?
or even people. They may take it out of our hands, the machines.
We'll do good things with it. Let's say that. Let's get it in the hands of people that will do good things with it.
We don't know.
Next week,
this happened so much faster than people expected. This wasn't supposed to happen for another 20 years. And now suddenly, it doesn't matter if it's conscious or not, just the abilities of what it can do, whether it really has a mind of its own or not, what it can do is so extraordinary that by teaching itself and have the ability to try things 1 trillion times in an hour until you get it right, that gives you a lot of power to learn what's right and what's wrong, what works and what doesn't work really quickly, and implement what does work. And so they've already done just extraordinary things with it, like untangling the structure of proteins, for instance, which normally would take a PhD graduate student his entire PhD program to do one of these amino acid proteins. They can do it in seconds. So they've completely now unraveled the structure of proteins, apparently, which opens up the possibility of creating new medicines and all kinds of breakthroughs for human health.
Like next week, I'm flying to Dallas, Texas. There's a company out there that's experimenting with AI for educators, and the purpose is to eliminate college professors. So I'm going to go over there and check them out and find out what they're doing. This because AI is a lot better for a teacher than a teacher. So all these things are happening. The point is, Richard Duncan has been a friend for years. He sits in Thailand. He sees the world. I see more opportunity than ever before, because out of chaos comes opportunity. And that's why, please subscribe to Richard's program, Macro Watch. And Richard, thank you for being a friend for all these years. So thank you. We'll come back for the final words. So Richard Duncan, thank you very much.
Thank you, Robert.
Thank
Kim,
you, Richard. Appreciate
thank you so much. It's great to see you again.
Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, thank you to our dear friend, Richard Duncan. Been a friend for years. Please subscribe to his Macro Watch. You get if you put crash in there, you get 50% discount. But things are changing so fast. when I met Kim, I was talking with a man named Dr. R. Buckminster Fuller, he had just passed. And Fuller talked about the thing called accelerating acceleration. In other words, there's acceleration, then there's acceleration on top of the acceleration. And that's what's happening today. And so millions and billions of people are about to be caught flat-footed. Just look at what AI is going to do, plus the lack of integrity of our governments. I'm not speaking Republican or Democrat, liberal or conservative, but there's been so much corruption, and what Fuller said we're going to do is enter the age of integrity. I think we're entering it right now. Look at the Fed's going to destroy $95 billion a month. It's going to crush mom and pop. At the same time, AI is coming up. Same time, India is coming up, and Americans are still wondering, what's happening with Bud Light and the tranny guy. I mean, we're so screwed up. I can't believe it. But hey, Kim, any comments about seeing Richard, an old friend of ours?
Yeah, I always love Richard's perspective, and he brings a different perspective. I mean, we've had people on saying the Fed's going to lower rates, and he's like, no, they're going to raise them again. So it's really good to get different points of view. But I thought it was really interesting when he talked about AI and that it's like 20 years earlier than they anticipated. So to your point, everything is speeding up. The acceleration is amazing. And there's no time better than to understand what the heck is going on, so that, I fear for a lot of people when these mortgages are resetting and the interest rates are going up. Unfortunately, there's going to be a lot of people on the other side of the equation that are not going to do so well. But then if you're prepared and you know what you're doing, you can do really well. So again, why they don't teach financial education in schools, I just do not understand.
Plus student loan debt. I mean, Biden tried that.
Yeah.
He tried to reduce it.
October.
Yeah.
Yeah, he tried to. It's like, let's give them more money. Let's give people more money. Let's make them more dependent on the government so that they're not going to be upset when we do stuff, and they'll vote for us and keep us in office forever.
So everybody's saying, "Oh, that's such bad news about student loan debt." But I was talking to Kim about it yesterday. I found a way that a company can reduce student loan debt, and so investors like myself or Kim can make 10% interest off of student loan debt. The point here is this: with the right financial education, it doesn't make a difference what the Fed does or what Biden does or what the world does. Big question is, what do you do? But I want to thank Richard Duncan. Thanks, Kim, for being part of this program. Thank you all for watching the Rich Dad Radio Show.
This podcast is a presentation of Rich Dad Media Network.